All right, welcome to The Explainer. Today, we are diving into a stock that is, well, it's pure chaos. We're talking about MSP Recovery, ticker MSPR. Its stock chart is one of the wildest rides you will ever see. And today, we're going to break down exactly how something like this is even possible.
So, first, let's just set the stage here. Take a look at this number. In the last year, this stock, it hit a height of $35.
And now, brace yourself for the other end of that spectrum. In that same year, the stock absolutely cratered to a low of just 19 cents. And no, that is not a typo. 19 cents. So that's the big question, right? How is this kind of extreme volatility even possible? How can a stock be a rocket ship one day and a lead balloon the next? Well, to figure that out, we've got to look past the chart and really dig into what this company actually does. Okay, so let's start with the business itself. What does MSPR even do? Because their business model, it's anything but typical. You can forget about selling products or services. This company is basically in the business of treasure hunting. Here's the deal in plain English. Their whole operation is about finding improper payments made by huge insurers, like Medicare and Medicaid. Money they paid out by mistake. MSP Recovery uses all this fancy data analytics to sniff out these errors, and then they sue to get that money back. It's really a three-step process. First, they identify the bad payments. Second, they launch all this legal action. And third, they collect whatever they can from recoveries and settlements. So yeah, that treasure hunter analogy, it's spot on. They're spending a ton of money on lawsuits, just hoping for that one massive payout. Now, a little bit of history. The company hit the public market back in 2022 through what's called a de-SPAC deal. It's basically a shortcut to getting listed. But man, it has been a bumpy ride ever since. They even had to do a reverse stock split recently, which, is a move companies make to pump up their share price when it gets too low, all just to avoid getting kicked off the Nasdaq. Okay, so if their entire business is about recovering money, you'd think they'd be rolling in it, right? Super profitable? Well, let's take a look at the financials, because the reality is a little different. Yeah, not even close. This chart right here tells a pretty stark story. In 2024, their revenue was about $18.25 million, but their net loss, a staggering $360.5 million. That is not a gap, my friends, that is a canyon. And that really gets to the heart of why their foundation is so fragile. This isn't a company with steady, predictable cash flow. Nope. Their financial health, their very survival, really, it all hinges on the timing of these huge, totally unpredictable legal settlements. It is the definition of an all-or-nothing game. Okay, so all of that brings us to the real reason for those insane price swings we saw at the start. It all comes down to something called the tiny float effect. And believe me, this is where it gets really interesting. So first things first, what even is a public float? Well, it's pretty simple. It's just the number of a company's shares that are actually available for you and me, the general public, to trade on the open market. This is super important because it's not the total number of shares. It excludes all the stock held by insiders or stuff that's restricted and can't be sold. And for MSPR, this is where it gets crazy. Take a look at this chart. A whopping 99% of all their shares are held by insiders or are restricted. That leaves just that tiny 1% sliver, about 660,000 shares as the public float. That is an incredibly small number of shares for the entire market to trade. And this tiny float explains so much. It's why you see these scary headlines screaming that, 25 or 30% of the float is shorted. It sounds huge, right? But the reality is, because the float itself is so small, the actual number of shares being shorted is also pretty small. It's a bit of a statistical illusion. So, what does this all mean? Well, think about it like this. It's like a tiny little boat in a huge ocean. Even small waves of buying or selling can make it rock violently. And that is exactly what's happening with MSPR's stock. With so few shares available to trade, even a tiny bit of activity can cause these massive, massive price swings. All right, so given this unique setup, what does the future hold for a company like MSPR? Where could this all go? Well, analysts basically see three possible scenarios playing out. And here they are. The most likely outcome, the base case, with a 55% probability, is that things just keep going like this. Small settlements, high costs, and the stock remains this headline-driven binary bet. Then you've got the bold case. They land a huge settlement, cash comes in, and the whole story changes. And finally, the bear case. The settlements don't come through, they keep burning cash, and the stock's value just erodes. Or worse.
So, if you're watching this story, the key isn't to get hypnotized by the daily stock price. No, the real clues are going to be in the official SEC filings, the 10Qs and 8Ks that talk about their cash and any settlement updates. You also got to watch their Nasdaq compliance status and any news about big partnerships, like the one they have with Palantir.
And all of this really leaves us with one final big thought. When you're analyzing a stock like this one, are you actually evaluating a business, or are you just placing a bet? Because understanding the mechanics behind the scenes, like this whole tiny float effect, is absolutely the first step to knowing what kind of game you're really playing.